Welcome to Wealth Beyond the White Coat, a show where we dive deep into the world of financial freedom for dentists and medical professionals. I'm your host, Deren Flesher, a dentist with a passion for uncovering the strategies that lead to a prosperous life beyond the office. Every episode will explore the avenues of alternative investing, tax mitigation, and secrets to build wealth that the textbooks don't teach you. Whether you're looking to enhance your financial literacy, discover new investment opportunities, or simply find a better way to manage your money, this is the place where your financial health is the core of our conversations. Welcome to Wealth Beyond the White Coat, where your journey to financial clarity and freedom begins. Hello, everyone, and welcome to Wealth Beyond the White Coat. This is part 2 of my conversation with Mark Costas, a good friend of mine and owner of the Dental Success Institute, Dental Success Network, and host of the Dentalpreneur podcast. In this part 2, we're going to talk about investing for income, answer the question of, would I pursue dentistry if I could do it all over again, and the differences between traditional stock market-based investing versus these private market alternative investments. So thanks for tuning back in to part 2 with myself and Dr. Mark Costas.
That's awesome. This is tangential to an opportunity zone, but what is your favorite asset class to invest in, just in general? Not just to offset taxes, but to invest for a return.
So I'll answer that a little bit differently. So the types of investments you can look at, there are some that are growth minded, where I don't need income from this today, but the payoff on the back end could be 3x or more if I'm willing to wait 10 years. And there are things that are income distributing, whether, it's an active business, it's an operating hotel. I like to mix those things, but I tend to skew towards things that provide monthly income. That was my goal in moving to this kind of pursuit in life, is to replace my dental income with other income. So I couldn't have too much of that pushed out in the future. A lot of it had to be paying me now, and that still has great return. Yeah, that still has great returns, but it doesn't have the big upside on the back end necessarily. Everything has a trade. There's only so much money to be made. And if you're willing to put it off, if that investment offers that opportunity to put it off, your payoff, if you're willing to wait on it, could be a lot higher.
What is your view on, so there's a lot of formulas out there, the rule of 200 and the 7% rule or the 4% rule, or I don't even know what they're all called, but they're wealth managers and these types of advisors. Financial advisors often utilize these rules like, here's your freedom number. Once you hit this particular liquidity or lump sum number, you can invest this capital and you have a drawdown percentage, and it should last you until you're 95 years old if you're drawing down. Or you can live off the pros of the average distribution or dividend that this lump sum of cash is going to spin off. What's the conventional wisdom right now, if you're being conservative, of how much you can get from a lump sum of cash? So, for instance, if you had $1 million, how much, if you're being conservative, could you count on being able to utilize from a cash flow perspective if you're investing 100% of that $1 million?
Yeah. So I will say that you ended there with, if you could invest 100%, it depends on where that $1 million came from. And if you actually do get to pocket $1 million, that's step one. Have you done things to make sure that is tax-free to you? Have you invested appropriately? Is that truly tax-free money and all the things?
Your liquidation event was $2 million. So you got $1 million. Okay. You didn't do a great job, but this is post-tax. Let's just say it's post-tax bucket of $1 million.
Yeah. So there's things you can do today. Interest rates are still high. So on the reverse of that, they're giving you good rates to put your money in the bank. So if you want to be super conservative, you put it in bonds and treasury and high yield savings and all that kind of stuff. And you're getting 5-ish% today. So your baseline, you can get 5% just on cash sitting in the bank. That's not normal. That's not typical. And that's probably not to be expected in the future. Long-term, historically, you can get, if you're willing to put in a well-diversified kind of total stock market fund with low index fees and not have a bunch of management fees on it, and you just put it to work for you and set it and forget it, you can get in the high single digits. But a lot of the stuff that I'm doing that's private is often, this is no promise or guarantee, but it's often double that. So that's the benefit of kind of private market, private placement opportunities is you're less liquid in the sense of I can pull money out of the market any given day. Maybe there's a little delay with having the market close and the transfer and all that stuff, but it's mostly liquid. I can pull it out within the week. A lot of these investments are illiquid. So you put that money in and it has some sort of event that has to happen, whether they sell it to some other bigger fish in 5 years, or they need to refinance it and give you back your original capital, or some combination of those things. And so that's why you get that higher return, is it's called the illiquidity premium. You're getting a higher return because you're essentially turning your money over and you cannot pull it out. You can with extreme events. If you have, there's ways to make that happen, but in general, it's not typically something you can just pull back out because you had something happen in your life and you need that money. And I will say that has a negative connotation, the way I said it, other than the fact that you get the higher return. But I'll give you a positive example. In 2020, when the whole world fell apart, if you were in one of these hotel deals, you probably, in the same way that people panic when the market starts to fall and they do pull their money and they take a huge loss, people wanted to do that in these hotel deals. And the same people that are building that hotel in San Antonio had a ton of people trying to pull their money out of other deals at the time. And because of the obligation in the deal, they said, no, you cannot pull it out. And you fast forward 3 or 4 years, everybody's been made whole. The thing's cash flowing again. The returns are great. They're back to where they were. And so sometimes that illiquidity premium protects you. So it's like that, having that discipline to put the money away month to month. It's the same discipline to trust your original instinct and all your research that put you in that deal in the first place. Don't pull the plug, or don't try to pull the plug because COVID or whatever, the world fell apart. Sometimes there are reasons to want to stay in it, and you end up coming out on the right side of it in the end.
Yeah, it's a great answer. What is your level of liquidity? What would you like to have set aside for an extreme emergency, a medical emergency, any type of catastrophic event that we see happen to people from time to time, unfortunately? What is your level of comfort as far as expenses times X number of months? What are we looking at for your personal comfort?
Hey, I just want to interrupt real quick and say thanks for listening to the podcast. If you didn't know, we have an associated Facebook group also called Wealth Beyond the White Coat. Over there, you can ask your questions, get feedback from group members, and have a close community of medical professionals who are likely interested in the same things as you. Whether it's alternative investing, tax mitigation, ways to keep more of your money, or even protect your assets, we're going to discuss those things in the group. Additionally, we have a private investors club called Legacy Point. As a member, you'll get exclusive discounts to preferred vendors, and you'll get access to private investments that you'll find nowhere else. Whether it's hotels, apartments, oil and gas, equipment rental, you name it, we'll be discussing those details and offering those investments to members only inside Legacy Point Group. If you want to learn more about that, please contact me, or simply email info, I-N-F-O, at legacypointgroup.com, or go to the website legacypointgroup.com. And Wealth Beyond the White Coat podcast listeners get an exclusive discount if you use the code WealthBeyond. That's all caps, all together, WealthBeyond at checkout. I'd love to have you in the group, and I'd love to see you making more passive income as you move towards financial freedom, whether it's freedom to retire early, spend more time with your family, go on more vacations, or just do more of what you love while you're in the operatory. I'd love to see you doing that as part of Legacy Point. So here's to improving your financial health. Yeah, I've gotten a little bit lower over time. I used to be closer to a year of liquidity. I was about 6 months for a long time for the last few years. I'm now closer to 3 or 4 months, not because I've drained that capital, but because access to capital has gotten easier over time. I've got a HELOC on my home that I've never drawn on, but it's there. So that's liquidity in my mind. So there's things you can do. To create liquidity that's not actual liquid cash. So those are some of the strategies I would encourage people to implement if they feel comfortable with that concept. But for me, that works, and it gives me the peace of mind to not have cash sitting in the bank at 5% or whatever it is, that I can go actually put it to work for me. but I still have that freedom to go get cash if I needed it for a true emergency.
I got it. Okay. If you are looking at a situation where you are a high income earner, okay, and you still have student loan debt, you have a bank note on the practice that you acquired 3 years ago, but you have some equity in the practice because you've helped it grow. How are you allocating any extra cash? You personally, are you aggressively paying down debt? Are you putting it in the market? Are you getting involved with some of these more exotic investment vehicles that you have taken advantage of? I'm thinking probably not an early stage dentist, but maybe a mid-career dentist that is still they're flush with cash, but they still have a significant amount of debt, I guess is what you would characterize them as.
Yeah, I think it's good to be diversified in general. Like I'm talking about what we call alternative investments or private placements, private offerings. And that's where I skew. That's where I like to, it's fun, but it's also got its advantages as well. But it's not my entire portfolio. I still do everything I just talked about with the market and total market funds and low index fees and all that stuff. So there's a place for that. I think it's easy, it's hands off, it is semi liquid in that way. And then debt depends for me. Debt's not a bad word. It's not a 4-letter word in that way. It depends on what it's doing for me. If it's leveraging me to make more money, and or what the rate is. Even if it's a good debt, but it's at 8% or whatever, that's bad debt to me. That needs to come down. So some of my student loans, I attacked in that way. But if you got a 3% note or whatever, I'm going to let that ride forever. It depends on where your Mendoza line is on rates and all that. But for me, probably about 6% is the dividing line. And just in my personal preference to say anything above 6%, I'm probably going to be more aggressive to pay off. And anything less than that, I'm going to let ride and put my money somewhere else.
Okay, I'm going to ask you a rhetorical question here. This is something that people ask me all the time, and there's no right answer, but I would be interested to hear your take because you're a young man and you decided several years ago that you wanted to replace your dental income. And then after that, you put down the clinical handpiece and decided to direct your attention towards running your dental practice, maximizing the value and liquidating that primary asset. And now you're doing just fine with basically the management of the funds and other investments. If you were to go back to undergraduate Deren, would you have selected dentistry again as the profession that you would have chosen to go into?
Yeah, 100%. I think it is a awesome blend of things that were my strength, science, math, but also a little bit of art. And then the entrepreneurship is still there. We talked about this at Summit. It's getting consolidated, but there's still plenty of opportunity for private practice owners and private ownership and solo docs. Even if you reset me today and put me back in undergrad, I would probably still be a dentist starting today. I think that's still the way to go. My parents are both nurses, so I shadowed a lot of medicine when I was making my decision, whether it was surgeons, optometrists, dentists, and I asked all of them at the end of my shadow with them, if I was your kid, would you tell me to do what you do? And almost none of them said yes, except for the dentist. They all had quality of life. They had Fridays off. They got to go see their kids play soccer. It was all the things that I wanted in life. And then I've gotten to put my foot on the gas as far as that personal stuff by exiting and being a practice owner and operator versus in the chair. But yeah, all of that's been afforded to me and I would 100% do it again.
And so that if your kids asked you that same exact question, you would encourage them to go down this road.
I would. Yeah. If they truly had a passion for it. I mean, I think there's something to be said about actually liking dentistry. I mean, I like dentistry. I wasn't in love with dentistry as a clinician. I mean, if somebody put me back in the chair and said, you still have to do this for 20 more years, I would be satisfied and happy doing it. But I liked the other stuff even that much more. And so as long as they have, an affinity towards the dentistry and the clinical part, yeah, absolutely. I think there's definitely still a lot of opportunity for dentists out there. Hey, I just wanted to interrupt the show real quick and tell you about an exclusive member discount for Legacy Point group members. The company is called Gelt, and they're both tax planning and tax preparation. We connected because their CEO actually comes from a family of physicians, and he understands the financial complexities that healthcare professionals face these days. Legacy Point is honored to partner with Gelt because it's our shared mission to empower successful professionals with optimal tax and financial outcomes. For your 20% discount off financial planning and tax preparation and priority access with their onboarding, become a member over at legacypointgroup.com.
Awesome. Okay, I'm going to end on this question right here. And this goes out to, say, potentially you are a mid to late career dentist. You're listening to somebody like Dr. Deren Flesher talk about all these strategies that you went elbow deep into these strategies early on in your career. You had figured out how to decrease taxation and maximize your return on investments, and you researched exotic types of investments, and you've gotten really sophisticated when it comes to how to manage your money. What would you say to people that are maybe mid to late career dentists? Because I talk to a lot of them and they listen to an episode like this and they just beat themselves up because they haven't even started yet. They've been in the trenches. They've been focusing on building their clinical skill set, maybe maximizing the revenues of their practice, but they haven't been a good steward of their high income. What would you say to them as far as where should they get started?
I would say it's never too late. There's no better time than now with whatever you end up doing. In the same way that we do with coaching calls, like the moment you realize it is the moment you should start to act on it. Putting it off is not going to make it any better. So with that in mind, I would start, assuming you don't have some of the basics in place, you start with that basic, what's the word I'm looking for? Discipline, and making sure you're putting money aside and starting to, but you're going to have to be maybe even a little more strict and disciplined because your time horizon is that much shorter. So you might have to really look at your lifestyle a lot more than your average younger dentist who can maybe not have that lifestyle inflation that you might have already done all that. And so you might have to trim away at that part as you're trying to build your nest egg or your investments, that cash flow or whatever your final pursuit ends up being in that regard. You might have to decide that I need to lower the bar here with what I'm doing as far as what I expect out of life and lifestyle, because there's no way to spin off enough cash to support this. But if you do want to pursue that, there are things that cash flow that represent or that can replace income. And those are all things that I'm doing myself in my 30s. It's not impossible. And for me, I've only been at this for less than 10 years. So if you've got a 8-10 year time horizon still, like you can do the same things. So I would say it's never too late. Definitely, look into it. If you want to lean on me, great. But in general, look into it. You can definitely do some great things with just a few years of time.
Amazing advice. Deren, is there a good way that people could reach out to you regarding Legacy Point, or even if they had any personal finance questions? You are, I would say, of our, 19 black belt coaches now, you're probably the guy that most of us turn to for personal finance stuff. In addition to, obviously, Dr. Chris Green. You guys dork out about this stuff more than anybody that I know in the group. So is there a way people could reach out to you if they have any specific questions?
Yeah, if they want to email me, they can email me at Deren, Deren, at legacypointgroup.com. Obviously, I'm on DSN, so if we're talking to any DSN members, hit me up over there too. We can make that part of our conversation. I think we can normalize talking about money and trying to open up opportunities outside the operatory. Doesn't mean you have to quit dentistry, but maybe you do more of the dentistry you love, or maybe you've got more free time, or you can move on to the niche that you want to do. So it doesn't have to be what I did to move totally out of the chair or out of dentistry altogether. It could just be more freedom to do more of the things you like to do. And that's definitely freeing as well. So whatever you want to do, definitely reach out to me and I can help you.
Awesome. Thanks, Deren. I know that you're busy. I know that you have tons of coaching calls. You and I have been on the phone all day. It's midday, but you and I have both had many calls already today. It's what I love to do, though. People are like, gosh, how do you talk all day? It's what I love to do. My kids always make fun of me because they're like, Dad, you just talk on the phone for a living. It's basically what I do, but I love it. Yeah. So I really appreciate your time today, my friend. And thanks again for bringing the thunder during your panel in front of that huge crowd in San Antonio. What a great experience. You guys really did a great job. So I can't thank you enough for everything you do.
Yeah, thanks, Mark. I appreciate it always.
All right, ladies and gentlemen, Dr. Deren Flesher.
Thanks for listening in to Wealth Beyond the White Coat, where time and attention mean a lot to us. If you found value in today's episode, please consider leaving us a review on your favorite podcast platform and share it with your colleagues and friends. Your feedback helps us grow and reach more professionals like you striving for financial freedom. Until next time, keep pushing the boundaries of your financial health. Thank you for joining us on this journey to wealth beyond the white coat.